Imagine the financial world as a massive, ancient city. For centuries, the city's gates have been guarded by a few powerful families. The big banks, the giants of finance, the institutions that move trillions of dollars like rivers. And inside this city, everything runs on a system that's been trusted for generations. But it's also slow, expensive, and stuck in old habits. Now imagine a new road being built. A sleek, modern highway that connects cities instantly without tolls, delays, or middlemen. That highway is blockchain. And today we're going to talk about a specific highway called XDC, a network that isn't just trying to win attention, it's trying to become the main highway for the future of global finance. But here's the twist. This story isn't about hype, it's about real infrastructure, real institutions, real adoption, because when the world's biggest financial players start showing up, you don't get hype, you get proof. Last week, a high-level event happened in Abu Dhabi, and this wasn't your typical crypto meetup. This was the kind of gathering where suits, ties, and power moves matter. Major global institutions showed up. Citi, Standard Chartered, Coinbase, State Street, and other giants. These are not small players. These are the pillars of the global financial system. They don't attend events just to check the vibes. They attend when they're evaluating something that could change the infrastructure of finance. Because here's the key truth. So when these institutions come together at an XDC-hosted event, it means one thing. XDC is being seriously evaluated as a future backbone for on-chain finance. We're talking about tokenized assets, cross-border settlement, trade finance, real-world industries that move real money. And guess what? XDC is already building partnerships in these exact sectors. So this event isn't a random meetup, it's a sign that XDC is being taken seriously by the financial world. Here's the part most people don't understand. Institutions move slowly, not because they're dumb, but because they can't afford mistakes. They don't jump into a new technology without clear regulations and security. And that's why the market often doesn't react instantly. People want immediate price pumps, but institutions think in terms of years. When the rules become clear, when the regulatory environment stabilizes, they commit, and they commit big. That's why this event matters. Because it shows XDC is already in the rooms where the future of finance is being designed. It's not just being discussed in private chats, it's being evaluated by the people who control the flow of capital. Now the story gets even more intense. A formal SEC filing in the USA has appeared, a proposed leveraged XDC-linked ETF. This is not just a document, this is a signal. A signal that financial product designers are preparing for demand. Because ETFs are not built around assets that institutions consider irrelevant. They are built around assets expected to attract capital. Think of ETFs like a bridge between the traditional financial world and the crypto world. They bring in liquidity, stability, institutional trust, wider retail access. And now XDC is being mentioned in the same regulatory conversation as Bitcoin, Ethereum, and XRP. That's huge, because it means XDC is no longer a niche blockchain. It's becoming a candidate for mainstream financial exposure. Even if the ETF isn't approved immediately, the filing itself matters because it shows XDC is on the radar of US regulators and major institutions. And once regulators start paying attention, institutions follow. Now let's move from institutional finance to global retail adoption. This is where the story becomes truly powerful. According to Alchemy Pay, USDC on XDC is now supported through fiat on-ramp, meaning you can buy USDC on XDC using Visa, MasterCard, and local payment methods in more than 50 fiat currencies. This is a huge step because it means XDC is no longer limited to crypto-native users. It becomes accessible to everyday consumers, businesses, and emerging markets. And here's why that matters. In many countries, traditional banking is slow or expensive, but mobile phones and payment cards are everywhere. So when XDC becomes easy to access through fiat, it becomes a natural choice for remittances, cross-border payments, international trade, global commerce. When people can easily move from fiat to USDC on XDC, the network becomes more valuable. Liquidity increases, transaction volume grows, developers and businesses start building, and over time, utility becomes the primary driver of value, not speculation. That's the difference between a pump-and-dump coin and a real financial infrastructure network. Now let's talk about the foundation of institutional trust. Security, because no institution will deploy large capital without a safe system. And that's why the XDC Network integration with SafeLabs is a major milestone. SafeLabs brings industry-standard multi-signature, multi-sig infrastructure. This is not a small upgrade. It's a requirement for treasury management, tokenized real-world assets, enterprise-grade operations. Think of multi-sig as a vault that needs multiple keys to open. It prevents single-point failure, it prevents hacks, it prevents unauthorized withdrawals. For institutions, this is a must-have. And by joining the SAFE ecosystem, XDC signals that it's ready for institutional-scale asset management. Now, let's connect all the developments together, because this is where the story becomes undeniable. Abu Dhabi event, institutional interest, SEC filing, regulatory recognition, Alchemy Pay, global retail accessibility, SafeLabs integration, security and institutional readiness. These are not isolated events. They are parts of a coordinated evolution. A clear narrative is emerging. It's not trying to be a coin. It's trying to become the digital highway for global finance. And the most important part is, this is not driven by hype. It's driven by real utility, real partnerships, and real infrastructure. Now let's address the biggest question. Why isn't the price exploding yet? Because markets often lag behind fundamentals, especially during periods of economic uncertainty. When the broader market is shaky, investors wait. They wait for clarity. They wait for stability. But long-term networks that gain institutional trust and regulatory recognition tend to outperform others because they are building the pillars required for sustainable growth. And each development we discuss today is a piece of that foundation. So here's the simple truth. The global financial system is moving toward tokenization, interoperability, real-time settlement, and XDC is aligning itself with this future. Not through speculation, but through infrastructure partnerships, regulatory engagement, and real-world utility. When institutions, regulators, and global users start adopting a network, the price eventually catches up. And if you're watching closely, you can see the story being written right now. So the real question isn't, will XDC pump? It's, are you ready for the future when it finally arrives? Because 2026 is shaping up to be a year where the world starts choosing the financial systems of tomorrow, and XDC is already in the room where that decision is being made. All content on this channel is for informational and educational purposes only, and does not constitute financial advice. Always do your own research before making any investment decisions. Thanks for watching Coin News. Don't forget to like, share, and subscribe for daily updates on crypto markets, price analysis, and breaking news. Hit the bell icon so you never miss an update from the world of digital currency.